And it's 10 a.m. right here in Lagos, Nigeria. Good morning, good evening. Wherever in the world you're watching from, it's Business Morning live on Channels Television. Thank God it's Friday. Let's kick off your morning now with the global markets. Now, starting with the oil market, we see oil prices fell in early trade today, but we're headed for a weekly gain with the market continuing to seesaw between fears of a recession hitting the United States and hopes for a strong fuel demand recovery in China, the world's top oil importer. See, Brent crude there added about 28 cents, about 0.3% to $84.22 a barrel, while U.S. WTI crude futures, that fell about 35 cents to $77.71 a barrel. The downturn was partly due to a report yesterday showing the number of Americans claiming unemployment benefits that increased more than expected last week, which reignited recession fears. Nevertheless, the Brent and WTI have jumped more than 5% so far this week, reversing most of last week's losses as concerns about further sharp interest rate hikes by the U.S. Federal Reserve have eased at this point. So we'll be watching out for how oil fares next week in the global commodities market. Well, it's the D-Day, February 10th, the deadline set by the Central Bank of Nigeria to stop the old 1,500 and 200 naira notes from being legal tender. But we're still waiting comments from the Central Bank of Nigeria with that Supreme Court ruling, suspending the deadline, and also the World Bank and IMF advising the Central Bank of Nigeria to allow ample time, for the transition. So remember, you can send us your experiences. If you're able to spend the old note, send us an email at businessmorning@channelstv.com. We'll keep tracking the story as it develops right now. And meanwhile, the instant electronic payments in the country have hit 38.77 trillion naira in January amid the short supply of cash in the country. According to the latest data from the Nigeria Interbank Sentiment System, the figures, the highest recorded for the month of January, and it represents an increase of over 45% from 26.65 trillion naira seen in January 2022. The central bank, the announcement, the Naira redesign policy with withdrawal limits, encouraging Nigerians to adopt electronic forms of transactions. So we've seen that actually spike electronic transactions at this time in January. But the Bank Directors Association of Nigeria says it's working to ease bottlenecks causing the unavailability of Naira notes in the country. In a statement signed by the group chairman stresses that the association is communicating with banks to speed up the resolution of the crisis. The bank directors also said that the difficulty associated with recent currency reform, making it priority to ensure the hardship is eliminated so that Nigerians don't have to suffer with this new policy. And the Trade Union Congress has put its members in what it terms red alert should the cash swap crisis persist. President of the Congress, Mr. Festus Asifo, told journalists at a news conference in Abuja that the union will have no choice than to defend the interests of the populace. The union calls on the presidency and the political class to realize that their actions are creating an atmosphere of anarchy. A trend, he said, must be reversed urgently. Take a listen.
We have never had it so bad. Never have our populace been made to attack banks, strip in banking halls, or threaten to commit suicide inside financial houses because they cannot have access to their hard-earned money. Nigeria as human beings are angry, justifiably so, and have shown their anger in several ways, including through protest. Tragically, rather than address the issues or try to assuage their anger, the security service under the presidency is shooting live bullets at defenseless Nigerians. The minimum irreducible for us is that Nigerians must have access to their money. Petrol must be made available at official prices. Therefore, the TUC, the labor movement, professional associations, market associations, and social movements have no choice but to defend the populace and prevent any tragic situation or scenarios. The leadership of TUC shall be monitoring the situation closely within the time frame of our ultimatum we earlier issued. And we give further directive should the situation not improve. All affiliate unions and state councils, civil societies, traders, students, our allies, market men and women, religious leaders are hereby put on red alert.
And as the 2023 general elections draw closer, most of the candidates have promised to reduce the cost of governance in Nigeria. But how realistic is this, and what does this mean? Let's talk to Gabriel Okeowo, now country director at Budget. Join us right here in the studio. Great to have you.
Thank you very much. My pleasure being here.
So, yeah, we've had, a couple of promises, from the presidential aspirants. They're talking about reducing the cost of governance in Nigeria. But I want you to paint a picture. How expensive is it for taxpayers to maintain the Nigerian government?
Okay, thank you very much. I think cost of governance has become a routine conversation that we've been having as a country over the years, and how big it is where we should first be looking at. And when you look at what it is that goes into maintaining the structure that we have currently. Nigeria is a population of about 200 persons, 200 million, right? We have 36 states, and currently the cabinet that we run right now, the mother ministries, we have about 26, 27 mother ministries. Some of those ministries, in Nigeria, we have senior ministers and junior ministers, and so when you look at what goes into servicing those ministries, servicing the leadership of those ministries, they are huge. If you put that side by side with a United States, for example, with its huge population, about 54 states, has just about 15 executive, departments or ministries, as we call it here. So when you then look at what is the relevance of some of these, ministries, and alone, aside from that, when you put that together, and that's just talking about the cabinet. When you look at the old MDAs in Nigeria, we are talking about over 900 of them, right? And all of these, we have either the executive secretary or the DG or there is a whole lot that we are spending as a country in maintaining this structure.
Because all of these people have to be paid.
They have to be paid because they're on the payroll of government, and there's not even talking about corporations. We have over 500, state-owned enterprises, and some of those state-owned enterprises are refineries, some government assets that have, group heads. They have the DGs, they have the executive secretary. They are not. These are even agencies that are meant to be, turning in revenue for government. But you realize that year in, year out, they are running at a loss, and yet we are still maintaining them. These guys still goes on training, they goes on traveling, they take pension and all that. And the question is, if we were to be a businessman or a businessman, and there is an arm of your business that is consistently, recording losses, what do you do? Do you keep using the profit from other arm of the business to service these that is consistent? And those are, things that you put together and that makes you look at the size of our governance. From the executive to the legislators, a bit on the judiciary, on how much goes into managing these three arms of government and the structure of governance generally in Nigeria. Because,
we've been hearing a lot about, tech layoffs these days, and obviously they did hire a lot, because of COVID, and they're now having to lay off, most of those people because they cannot continue to. So if we run Nigeria, as a business, with a CEO, what should we be doing at this time?
Maybe this is another opportunity we have as a country, really, for us to rejig the system. And a lot of us are anticipating who comes into administration come, May 29. And if we are going to make any significant change, there has to be that person that can wear the cap of a CEO, that can run Nigeria like a private business, and really look at what is working and what is not working. We have a whole lot of our potentials or the structures that we have built as a country that are not really working. They are not yielding what they are supposed to be yielding. We have to go back to the table and look at them. And there are loads and loads of reports and analysis that have been done, even by government, by civil society organization, analysis by media organizations that has been done on some of these things. That we need to go back and look at those reports again and see what
let's compare to other African countries. Is this what is also obtainable there?
When you look at, if we compare, the system of government that we run here to neighboring African countries, unfortunate that I don't have, word for word analysis on that. But you don't see this. This is common in Africa setting, but not to the tune at which we are running it in Nigeria. So let's take, for example, the legislative arm of government. Every state in Nigeria will have, at the federal level, at the state level, we have representative at the state houses of assembly. We have 3 senatorial districts. We have another 3 or 4 at the House of Representatives. Those are functions that looks like a repetitive roles, right? And the effect of that is that it's built up on how much goes into managing this structure, right? These are guys that you have to change their cars, you have to give them wardrobe allowance, you have to give them newspapers allowance, and all of that. We need to look at that structure again as a country, so that we are not just taking the template of, democracy as, federalism as it has been handed over to Nigeria, and we are just running with it. Can we look at it again and tailor it to what works for us? What has actually been the impact of having, 3 senators from each state, having honorable members of House of Assembly, House of Representatives? What has been the impact of having a senior minister and a junior minister in a particular ministry? We need to look at all of those structures again, and see what is working and what is not working, and then drop what is not working. That is what a CEO that is running a private business will actually do. Every time, every quarter, you are sitting down and you are checking your books again. What is working and what is not working? I think that's the question we are not asking in Nigeria. It just appears as though when we create a structure, we allow the structure to go on an auto run, and our budget is like a copy and paste. We just keep allocating without checking back on what did well, what didn't do well, what do we need to cut, and what do we need to remove.
And talking about the new CEO, do you think it'd be that easy to cut the cost of government?
Well, we know that, among the front runner, we have some of them that are promising, but the truth of the matter is it is not going to be easy. That's the truth. But the situation we are finding ourselves in Nigeria today, we need that leader that can be bullish in his approach, or we don't have any that is a front runner, right? That can be bullish in approach, that can, axe out all of these loopholes that keep sucking out the resources of this country.
Because it seems like this will be met with some resistance.
It will definitely be met with some resistance, and most of the time when there is a need for us as a nation to, effect some of these critical changes, what we have seen and why it doesn't work is that government usually goes to the cheap part, which is how it affects citizens, right? So if it will be, what we are saying is not for a government to come in and begin to look at reducing or tampering with the parts that will impact more on citizens. Can we begin the axing from the government itself? If a president comes in and it's difficult to adjust the cost of governance in the legislative or the judiciary arm of government, he can start with his cabinet. We need a president that can come in and say, I don't need 27 ministers, senior ministers, 16 state ministers of state. I don't need all of that. I just need a 10-man team or a 15-man team that can work with me. I know a lot of things we go into that. We'll begin to talk about federal character, because there has to be representative. All of that, I believe, if the man at the ends of affair lay out his plan and have a strong justification. As a matter of fact, if we see that as ordinary citizens happening at the executive arm of government, happening at the government, right, it would then be easier, lot easier for citizens to, also adjust to whatever inconvenience that this bullish approach may also bring on citizens. But most of the time we see this policy change, we see this quote and unquote innovation affecting the citizens, and it just looks as if it is at the detriment of the citizens that the elite or those in government continue to maintain certain parts of kind of lifestyle.
And let's say this, continues. We're having to pay so much to, maintain the government. There's no reduction in cost, and revenue is still where it is. What happens to the economy?
What happens to the economy is what we are seeing now. Right now, as it is, we cannot boast as a nation that any of our revenue will be enough to service our debts and be enough to meet our recurrent, not to talk of, having some leftovers to go into capital expenditures. And when you look at the size of our recurrent expenditure as a country, it keeps going higher and higher at a size that is not commensurable with capex. Right? And when you look at it, recurrent is that part that service the government, that service those in government, either by the building, the structure where they work from, or even their salaries and the largesse of the cars, the entourage that they have, is the recurrent that service that. And you see that on a yearly basis going up and up. But when you look at capex, you are not seeing the same thing. Let me give you an example. In the 2022 approved budget, the personnel cost was 5.6 trillion. Overhead cost was 5.5 trillion. Capex was 4.3. In the 2023 approved budget, now look at what happens to overhead and capex. Capex moved just by 600 million from 4.3 in 2022 to 4.9 in 2023. But when you look at overhead, you are seeing 5.5 in 2022, and then you are seeing 7.8 trillion in 2023. Look at that huge gap, right? And that's what we are talking about. How come that our overhead keeps increasing? We run, I have the opportunity to be running an organization, and I know that the solar system that I bought, or the router for our internet that we bought last year, will not necessarily be changed this year. At least we expect that should run us another 3 years before we need to change it. But what we see in government is there is a need to keep purchasing laptops every year. You are even purchasing cooking utensils in the Aso Villa every year, and that is the little ways that our cost of governance increases. And we should not just focus on federal government alone. Even at the state level, there is a huge cost of governance that is also going on.
Is there a cheaper form of government?
Well, maybe no, but it should not be. It should be. Let me give you an example. Let's narrow down states, for example. The operating cost of a state, let me use Bayelsa State as an example. The operating cost of Bayelsa State is far higher than the operating cost of a Kano State, higher than the operating cost of Rivers State. Now, when you put that side by side, and not considering the FARC allocation, let's look at the IGR capacity of this state. Bayelsa State in a year will struggle to make a 20 billion naira in IGR, right? Now, when you put that side by side with a River State that will make over 100 billion, about 140 billion in IGR, and yet the operating cost of a Bayelsa that is struggling to make a 20 billion is higher than the operating cost of a River State. How do you balance that? Now, the question will be, how come, where are they seeing the excess money? Of course, there is a FARC allocation, there is 13% derivative, and all of that is not meant to increase the cost of governance, which is what we are talking about. It should actually be an advantage that they have access to these other sources of revenue to improve on the lives of the citizens, of the well-being. But what we have seen is the more we have money in circulation, the more the lifestyle of government improves, and then that comes to the detriment of the citizens. The same conversation we also goes to...
And I'm wondering if there's a universally accepted size of government.
Of course, I'm not sure there is any universally accepted, size of government. What I just believe is every government, every nation needs to develop what works for them, right? We need to look at context. And the anomalies we can easily see. If the convoy of a Lagos state governor and the convoy of a Ekiti state governor is the same thing, is the same size, it is an anomaly. It is not right. Because what Lagos state will make in 1 month is what another state will make in 1 year, for example. It then means that what it will take to run a state like a Lagos will be more than what it will take to run a state that will make what a Lagos will make in a month, in a year. So we should look at all of that. But when you see our governors moving, when you see the senators and all of them moving, they seem to be at par. If our business, if we are running business and your turnover, you are doing a turnover of ₦1 trillion in a year, and I'm doing a turnover of 10 million in a year, we are not definitely going to live the same
we can't
lifestyle.
Have the same
we can't live in the same environment. We can't drive the same car. How come that when it comes to governance, states that are not doing at par with other states all have the same kind of lifestyle? Those are the cost of governance that we are talking about.
I guess the new government, they have a lot of pruning.
It's a lot of work
to do at this time.
It's a lot of
definitely
work.
Hope they have the political will to actually go ahead with that. I want to thank you so much, Mr. Gabriel Kewo, Country Director of Budget. It was great having your perspective.
Thank you very much.
All right, so we've been talking about pruning the cost of governance in Nigeria. But after the break now, we're going to be looking at the IMF Article 4 consultation with Nigeria. That's our next conversation. To stay with us. Welcome back. Now to our next conversation. The IMF has concluded its 2022 Article 4 consultation with Nigeria and noted that there is urgent need for bold fiscal reforms to create needed policy space, put public debt on a sound footing, and reduce vulnerabilities. For analysis now, we have Dr. Omobala Adu, investment research analyst at AfriInvest. Great to have you on the show. Good morning.
Yeah, good morning, Larry. Nice to be here.
So what can you tell us about these needed reforms the IMF spoke about and the expected impact on the economy?
Yes, thank you, Larry. So for context, the IMF usually meets with its member countries usually once a year. And what they basically do is to collect economic data, financial information, and have discussions with country officials on their expectations for the economy, and then discuss that with the IMF Executive Board. So what we have today is a summary of that meeting with the IMF staff have had with the Executive Board. And basically, they've mentioned some key reforms that are not new to our hearing. So they talked about the removal of fuel subsidies, and as well as revenue mobilization through tax reforms. So these are not new things that we've heard so far. In terms of the fuel subsidy, we know that fuel subsidy is a big drain on Nigeria's physical capacity. If you look at, we had plans to remove fuel subsidies last year, but that has been delayed to this year. And based on expectations and estimates, the fuel subsidy is supposed to cost us around 3.4 trillion if it's removed by mid-year. But if it stays to the end of the year, while we're seeing fuel subsidies impacting the government's budget by roughly 6.4 trillion. Now, if we look at that in terms of the impact on the budget, we are seeing that funds that could have been channeled to more economic stimulating activities that would then have multiplier impact on the economy in terms of boosting growth, employment opportunities are being channeled to fuel subsidies. If you also look at it from the context of what we're spending, the budget is roughly around 20.8 trillion. Removal of subsidies would mean a budget less than roughly 3 to 6 trillion, which will give the government more room to channel funds into capital expenditures that are likely to bring about economic impact on the country. And then that's it even is from the expenditure side. If we look at it in terms of the fiscal deficit is estimated at over 10 trillion this year. We will see the impact of fuel subsidies and the cost in terms of visiting the capital market in terms of borrowing. So it's not news that fuel subsidies are a huge drain on our fiscal capacity, even if you even look at it from the angle of revenue, right? On the average, close to 73% of crude oils are swapped in terms of PMS. So we're also looking at it in terms of subsidized revenue. We know that in terms of revenue, the government is projecting around 9.7 trillion, but given historical underperformance, we are likely to see 20 to 30% shortfall on that angle. So in terms of fuel subsidy, this is a discussion that is basically not new. We've had these discussions severally, and it's time for that the government needs to consider the impact of these subsidies in terms of what it's doing for the budget. Now, in terms of revenue mobilization, right, the IMF highlighted the need for bold tax reforms. We know that in terms of tax revenue to GDP, Nigeria has one of the lowest compared to African countries, roughly around 7% of GDP. This is about 10 percentage points just from sub-Saharan Africa's average. And the reasons are not far-fetched. If we try to look at why Nigeria's tax revenue to GDP is basically low, we can look at it in terms of three perspectives. One, in terms of the tax rates, in terms of VAT tax rate around 7.5%. We can also look at it in terms of the perspective of the tax payment system and also in terms of tax compliance. Speaking to the first, we know once again, Nigeria, in terms of VAT, we pay one of the lowest compared to Africa's average, roughly around 18 to 20%. And we've seen in terms of the Finance Act and some of the things they want to make in terms of reform of VAT moving to maybe 10% or between 15 to 20% subsequently. If you also look at some proposals in terms of introducing a sales tax of around 10%, if that is done, we are seeing an effective tax rate of close to 28%, which will make it one of the highest in Africa. But then again, we consider the downside effects. Even though on the upturn, we are seeing more revenue for the government, it just means more economic hardship. So playing that route might not be the best move for the government. We think we need to see improvements in terms of the tax payment system and in terms of tax compliance. Now, in terms of the tax payment system, Nigeria ranks around 159 out of 189 countries in terms of the ease of paying taxes. In fact, we make on the average 48 tax payments in total, and it takes on the average over 349 hours for for companies or individuals to comply with tax obligations. If we compare that to Sub-Saharan Africa's average, that's roughly around 280 hours annually. So we can see that even from the tax payment system compliance, we're seeing that it's basically more difficult to pay taxes in Nigeria compared to our African peers. So we need to look at ways in which we can bring in better automation that make the tax payment system easier. Okay. And then it encourages people to comply with taxes better. All right. And finally, in terms of tax compliance, we see that generally we have this perceived low level of tax compliance in Nigeria. And if you think about it from the impact, we know that we have a situation where most Nigerians complain that they are not seeing the impact of their taxes on the economy in terms of infrastructures. If we also look at it from the perspective that a number of medium, small enterprises operating in the informal economy are outside the restrictions of some of the formal channels, it then just exacerbates some of the challenges that the government is facing in terms of raising revenue from taxes. So combined together, if we see some of these reforms coming in, although in terms of the fuel subsidy, it means that the economy will have to go through a period of pain. But at the end, we see that in the long run, then we stand to gain more. On an optimistic basis, we see that this year the country could do roughly about maybe 3.9% in terms of growth if some of these bold reforms are being put in place that the IMF has rightly mentioned and some of the discussions we've had over the past year.
All right, Dr. Adu. One other recommendation the IMF gave was for the CBN to be decisive, on tackling in inflation. And, well, they've done about 600 basis points, from 2022 till now. But they say if inflation keeps going up, the CBN should raise rates, even more. How do you see that?
Yeah. So just like you rightly mentioned, if we look back to the ending of 2022, we saw inflation moderating to 21.3%, which was the first moderation in over 11 months, coming on the back of the CBN Monetary Policy Committee raising interest rates by over 500 basis points. And this year, they've backed on another 100 basis points increase. Now, in terms of the impact on inflation, first of all, we believe that inflation is likely to moderate this year down to about 17.7% on the average, compared to last year's average of around 18.6%. And one of the major reasons why is the high base year effect that we experienced in 2022. So barring any unexpected shock this year, we see inflation moving on the downtrend. We saw that last year it was the escalation of the Russia-Ukraine tensions that helped stoke commodity prices globally and fueled our inflation. But this year we're seeing that if we don't see unexpected events, inflation is likely to move on the downtrend. And that means that the CBN is more or less likely to embark on the hiking spree that we saw last year. If you look at what they've done this year, the 100 basis points, we believe that there's possibility of another room of another 50 basis points hike in inflation. But in general, we believe that inflation is more likely to moderate this year, which means that the CBN might be more or less likely to embark on a hiking spree. But in the event that we see the opposite happening, in terms of the implications, the direct implications will be in terms of increase in the cost of borrowing. We're seeing cost of borrowing of companies basically increasing, and that has a negative impact in terms of profit, but in terms of profitability, and also for an individual basis, it means that less people would be more willing to visit the financial market to take up loans, considering obligations to pay back.
What if, the central bank, keeps hiking rates, but, at the same time, still making loans available to the federal government through ways and means? What happens?
Yeah. So we know that's rightly that the government has already made plans to securitize the ways and means. So if we see the possibility of that continuing, it also speaks to the first point in terms of the needed reforms that have to be made. So currently, ways and means are roughly over 20 trillion, 20 billion today. So in terms of the context of what that is happening, it means that we're just likely to see more physical body strains. Debt service to revenue, currently over 80%, means that the government is basically paying more on borrowings, and then that have an impact in terms of their capacity to come back to visit the capital market in terms to raise new borrowings. So we are seeing a situation where the government has to do the right things in terms of stopping the overdrafts that have been made to CBN. We need to move back into terms of what is constitutionally right. By the addition of the ways and means estimates, we're seeing the debt profile likely to jack up higher. We're seeing the debt to GDP ratio move closer to the DMO's threshold of 40%. Currently, with ways and means, we're seeing debt to GDP ratio at over 30%. So we're already in a worrisome state in terms of our fiscal capabilities, and therefore there is need for the government to look at ways to quickly move to securitize the ways and means, and also try to restrict these advances made to government in terms of, we look at it in the impact of how these funds come into the economy and improving or increasing the money supply, and then its indirect impact on inflation in the country today.
And I know you at AfriInvest, you're giving your growth forecast for 2023, but with what's happening now, with what we've seen in January, from the currency swap to the fuel scarcity, are you looking at revising that forecast?
Yeah, so thank you for that question. So if we first of all look at the Nigerian economy, first of all, the economy has proven to be resilient. If we look back at what happened in 2020 in the midst of the pandemic, most people expected the economy to severely contract, but we saw that after the decline in the second quarter and third quarter, the Nigerian economy came out of the recession in the fourth quarter of 2020. So it basically showed us that indeed the Nigerian economy has been proven to be resilient in terms of challenges being faced. Now, if we look at the current happenings in the economy in terms of the currency crisis and the fuel scarcity, we believe that these shocks are more or less temporary events which are likely to phase out before the end of the first quarter, especially on the Naira redesign policy. So based on these expectations, we still hold on to our base assumption that this year the economy is likely to grow roughly by around 3%, barring any unexpected events to happen. Just like we directly mentioned, these things we're experiencing are not likely to be permanent shocks to the economy, but just a temporary freeze that are likely to phase out within the next month or two.
All right, let's hope for no unexpected shocks going forward in 2023. Thank you so much, Dr. Omobola Adu, investment analyst at AfriInvest. Thank you so much.
Yes, thank you for having me.
All right, now, so, we're talking about the IMF Article 4 consultation with Nigeria, and obviously they had a lot of recommendations. World Bank also has a lot of recommendations regarding the Naira swap at this point. But let's look at what's happening with the markets now. We have Anyete added with the details, and we got that negative close yesterday, 0.12%.
Yes, good morning, Ladi.
Morning.
Yeah, it's another back and forth movement for the equities market.
It was like seesaw all through the week.
Yes, you call it a seesaw. I call it a back and forth.
Back and forth.
Yes, you know, 2 days positive, 2 days negative.
Yeah.
Although it's not consecutive. So now the thing is, the markets so far, I'll tell you that the market is still in positive terrain. Month to date is about some 2.1%, and then year to date we're at 6.07%. So not too bad, especially when you consider that we had expected that the market will make a pullback. I and some other economic analysts would said, yes, the market was going to make a pullback to maybe around that 30,000. But what you see on the board, it will tell you that the market is at some, maybe like about some 14-year high, but that's not the highest level so far. So
and what we're seeing, with the local bourse now, we've seen it, keep going on that upward trend, even though we've had issues with cash and transfer of money at this point. But it looks like the stockbrokers are not having any problem getting funds to buy these stocks with what we're seeing with the market. Yeah,
at the same time, that it's not just all about cash. There are other alternative channels too.
Yeah, which are pressured at this time.
Exactly. And it's surprising because to me, the stock market is called the barometer of the economy. So now, is it really reflecting the macroeconomic environment? But we'll have our analysts to talk to us more about it.
Exactly.
So for now, let's just give ourselves a review of the market at the close of Thursday's trading session. So about 36 billion naira is what was knocked off from the previous gain that we had. We had 81 billion naira added to the market. But now what you see on your board there, 29.609 trillion naira is what it closed at for Thursday. That's after it lost about 36 billion naira, while the all-share index, I would say still comfortable in the 54,000 level, hasn't gone to much lower than that, but just 0.12% is what it fell by at the close of Thursday's trading session. That's in basis points. That's about some more than 60-something basis points. Now, take a look at the counter there. We had it was a slightly negative market breadth. We had 17 losers against 16 gainers. We saw the likes of Zenith Bank, there's the likes of GTCO, having an impact, as well as some other tier 2 lenders having an impact on the markets index, 0.38%. That's how the banking sector index of the Nigerian Stock Exchange, that's how it fell. And then, of course, for the consumer goods sector, we had the likes of Nigerian breweries, it fell by 2.63%. We had the likes of GSK, it fell by 7.91%. And that's why that market, it fell by 0.30%. Other markets, we also had for the insurance sector, we had WAPIC. WAPIC was down by 4.4%, while for the oil and gas sector, we had Oando, which pulled back by 1.02%. We had Total, which pulled back by 2.32%. So that's why that market were in the red, while the industrial goods was just a tad in the positive, 0.0002, 1% in contrast to what it had on Wednesday. So that's it for that market. So now when you take a look at the activity chart, it was a flip. A previous day, the activity chart was in the red, but at the close of Thursday's trading session, it gained back, it went back into the green, 46.84% in terms of volume of transaction, while the value of transactions was up by more than 67%. For the deals, also in the green, 10.52%. So that's it for the market. So now we will be talking to the Chief Executive Officer of Wyoming Capital and Partners to tell us more about that market. So if we have him, he'll give us more details about that market. But for now, let's move over to the smaller unlisted securities market. For that smaller unlisted securities market, the NASD index at the exchange, it made a rebound, a slight rebound, about a 0.25% rebound, 709.02 index points. That's what it is for the market. And at the same time, that's the amount or the percentage at which the market cap went up. In terms of activity, the activity there, the volume of securities traded as at yesterday was down by 39.58% at 1.65 million units. Value 5.16 million, while the deals is just 9, and then for the stocks traded there were just 4. So now, to give us more details about the equities market at the NGX's performance for Thursday, let's talk to Tajuddin Olainka. He's the Chief Executive Officer of Wyoming Capital and Partners, also a stockbroker. So thank you for joining us, Tajuddin.
Yeah, good morning, Anity. It's my pleasure.
Okay, yeah, I know so far we've been having a series of unaudited results released to the market, and the market has been having 2 days positive, 2 days negative. So can you tell us more about that and what to look out for Friday's trading session?
Okay, yes, market has actually been behaving in a way that any rational trader should actually expect at this time. Market went down yesterday, so just same way it went up, on Wednesday. So we are beginning to see market actually reacting in its normal way at this time. Profit taking and bargain hunting, happening side by side. I think what happened yesterday was more of profit taking, and similar thing happened on Tuesday. So when you have market this way, it's just a normal reaction that you must expect at this time. Given also that market has moved significantly up to the level that we have it today. 54,000 index point is not a common index point at this time. Especially given the fact that we had it last in 2007. So market is just reacting normally, just in its normal way, by way of profit taking. So that same thing we see happen today. I don't expect anything different. There'll be profit taking. Of course, there'll still be bargaining because we still have some stocks that are still trading at below their year high. So those stocks still over upside opportunity for investors that may be willing to also engage in bargaining hunting or to take position ahead of release of full year results.
Okay, so Tajuddin, now it's quite interesting to know that the market has been able to hit a 14-year plus high, but now within the inflation, within the month of election, which is just about 2 weeks away, and then next week we'll be having inflation report out, and considering the fixed income environment, what's your expectation for the equities market with all this taken into cognizance?
Okay, let me also add that market is up at this time not because market is not sensitive to economic data like inflation number that we've been having, or it's not sensitive to possible MPR hike. But market is actually looking beyond beyond the current administration. Market is showing that bullish sentiment on transition and of course on year end. So irrespective of what inflation number we have next week, or that MBS should be releasing next week, or what other economic data, my point in direction of negative outlook, we'll still have a market that will remain this way until all companies have actually announced their results and they have declared dividend. So don't forget, market is actually is bullish on year end, and it's also bullish on the transition, because market investors believe that after May 29 we are likely to see a shift from public sector domineering focus, that means, to a private sector domineering focus. So market is pricing in all those factors, the shift from one administration to another administration with different focus, that irrespective of anyone that comes in among the three gladiators, we are likely to have a shift of economic focus, and so that is also responsible for the bullish trend we are seeing in the market. Yes, there will be profit taking along the side, but that does not diminish the fact that market will still continue to behave or react to what will happen post May 29, 2023.
Okay. Thank you so much for your time, Tajuddin Olayinka, Chief Executive Officer of Wyoming Capital and Partners. So, Ladi, at least before I go, for the fixed income market, there was bullish sentiment across the bonds, treasury bills, and the almost segments. And of course, the money market, overnight lending rate, it closed flat at 10.8%. So that's it for the markets.
And quite interesting take there by Tajuddin there. So the market is focused on transition.
Exactly.
At this point.
Yes, it's very interesting.
Very interesting. Yeah. Thank you so much, Anita. Anita there giving us the details for the local bourse and the fixed income market. Let's move on to other markets now. We see Bitcoin there started another fresh decline from the 23,500 resistance zone and gained a bearish momentum at this time. So massive pullback yesterday, and we're also seeing a pullback with the fear greed index showing the sentiment in the market right now, showing as 48. We've been at greed for the past couple of days, but now back to neutral, showing that there's some fear in the market, starting to creep up, gradually. Let's look at the market cap this morning. $1.02 trillion, down 3.76%. Was about 1.06 trillion yesterday, but we've lost that number now. Hopefully it doesn't go below the 1 trillion support zone there. 15.38%. That's volume traded this morning from the sell-offs we see in the market. Bitcoin dominance 41.46%. Let's look at the price of Bitcoin this morning. $21,890. Lost the 23K mark. Lost the 22K mark, down 3.68% this morning. Volume traded $30.66 billion. So we're seeing sell-offs in the market at this point. Ethereum losing that 1,600 level. That's down a big 5.19%. And volume traded, that's $9.76 billion this morning. Let's look at the top alts by market cap. Big losses we're seeing here with Cardano, the biggest loser, down 6.47%, trading at 36 cents per token. BNB looking like it's going to lose that $300 level, down 4.63%. And XRP, not so bad. Looking for Matic and XRP is just 1.1% losses we're seeing with Matic there, $1.27. And we look at the top 7-day gainers now. We see AGIX, that's topping the counter, 114.13% profit in 7 days so far at 41 cents. With the AI trend now, we're seeing traders quite bullish on that, and same with the graph, 63.18% up. Little down, also on that top gainers counter, 47 for the whole week. 20.18%, $2.65. So we're seeing big moves for the week, all pushed by the AI trend we're seeing right now. Let's bring in Solomon Amunde now, financial market analyst. Hello, Solomon.
Good morning, Ladi.
Good morning, Solomon. Great to have you. So it's looking like Bitcoin price performance this week is bearish.
Yeah, I'm certainly not bearish. We're just doing a little bit of correction. And like you can see, we already touched about $1,600 for we have a very, very huge demand at around $21,400. So we might still see Bitcoin correct a bit further to 21,400. But in all cases, I'm expecting Bitcoin to bounce back to about 23K levels. So it's actually a very healthy correction we are seeing today in the market.
Okay, so you see it as healthy. And looking at the 7-day gainers there, we see that the AI trend, pushing most of these AI projects up. We see AGIX, that's up 114% in 7 days. Do you think this party is still early or it's quite late for those who've not entered it?
I would say we are about 80% in, and then we still have about 20%, which is like a third leg from the AI projects. So Bitcoin retracement gave them the signal that they needed to start making their third leg move up. So I'm expecting most of the AI projects to do about maybe 30% or at least 25% gain between this week, Saturday, and next week, Saturday, basically.
And it's quite interesting how these trends, I think they start off so quiet that at the end of the day, you just find out you're actually late, to the party. How do you spot these trends before they start?
Okay, so most times it starts with a news from most likely a big player. For example, like the AI trend started with ChatGPT, the AI bot that they released, and it was what ushered in this whole massive trend. And if you notice, it seems like the whole of 2023 would be filled with lots of AI trends, and we have more companies, and we also have Google pushing out their own AI projects that they're supporting. And
I'm definitely, I see other trends definitely coming up.
It starts with just one. And afterwards, as a user, you just have to identify the next projects that will tag along.
All right, so I thought I lost you there, but yeah, I guess it was network issues there. But thank you so much, and looking forward to the next trend. Thank you, Solomon Amunde, financial market analyst.
All right, thank you, Larry. Thank you.
All right, let's look at the top 7-day losers. Phantom, that's topping that count. It's had an incredible run from last year, December till now. Was trading about 16 cents by then, but it's had a good run. Topped out about 63 cents, was down 27.23% for the week. Sabre Aptos there, 22.24%. The YDX. So we're seeing massive profit taking at this point with some of these projects have had quite a good run for this week. And that's it for the markets today. And that's a wrap on the program. Don't forget to join us at 1:30 on Business Incorporated for more updates and developments in the world of business. And you can watch this again on all our other productions. Just flip over to YouTube, search for Channels Television, click on our videos, and you can watch all our productions. Thank you for watching. Enjoy the weekend. Thank God it's Friday. Bye for now.